Hi, good morning. Thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Mathew. Like the name suggests, this show gets you answers to all of your stock-related questions, whether they are short-term in nature or long-term. We've got you covered. That number that you see on the screen, on the bottom of the screen, that's where you send your queries to us. And in fact, if you are tuning in on any of our social media platforms, you can message us there as well. Let's take you through where the markets are right now, and we're tantalizingly close to that 25,000 mark on the Nifty 50. In fact, at 24,955 as we speak, and heading towards that mark, inexorably so. And, well, we might just talk about it later in the day. But as things stand, we are more or less where we started off the session at. The broader markets are looking even better, in fact. You have the mid-cap index that's gaining about 0.8%, and you have the small-cap index that's up about 1.3%. And as a consequence of that, the market breadth is very firmly tilted in favor of the advances at the start of the week. Of course, you have global cues that have been supportive and continue to remain so. Let's see if that remains the case in the later part of this week. The major cue, of course, overseas is going to be that FOMC meeting outcome, where there could be an indication of a rate cut by the US Fed. Let's talk about a few of the constituents on the Nifty 50 then, and among the key contributors, right on top of the list, you have ICICI Bank, and we'll talk about that. That is the focus at the start of today's show. But very quickly, some of the other gainers, you have the likes of Larsen & Toubro as well as SBI, Reliance Industries and HDFC Bank supportive. Not tremendous gains of a little over 0.5%, but they're supporting the benchmark. Among the losers, you have the FMCG pack that is not doing too well today. In fact, you will see that in the sectoral performance. It is one of the laggards in trade today. FMCG as a pack losing about 0.2%. But then there you go. IT and FMCG underperforming. Not too much to speak of in terms of losers, though. We've got Harsh joining us at the start today to talk about the focus, which is, of course, as I mentioned, ICICI Bank. Harsh, we've seen the private banks report their numbers. ICICI Bank looks positive. Of course, the concern continues to remain on credit cost.
Well, yes, Alex, and a bit of no. In fact, when you're looking at the overall picture with regard to at least the Q1 numbers, which is what I'll try to focus on, because that's why the stock's buzzing. Your margins have held up surprisingly well. 4.4% was the margin number at the end of Q4 FY24. It's come in at 2.36%, so very, very small contraction. When you're comparing that to a Kotak and the way in which a Kotak Bank or an Axis Bank's margins have contracted, there has been a larger shrink where Kotak's margins are concerned. And therefore, ICICI Bank standing out with regard to that margin number, especially in the larger private banks. Now, when you're switching focus more towards the operational side of things, while the margin NII largely in line, you saw operationally a very strong quarter coming in from ICICI, and therefore your operating profit was a beat in comparison to at least NDTV profit estimates. You also saw provisioning largely in line, and therefore profit after tax was also a beat. And therefore, when you're looking at it from an overall perspective, you're seeing, at least on the P&L side of things, a good steady set of numbers continue. Your ROA is remaining at 2.36% versus the same number in Q4 FY24, and asset quality holding up. In fact, on the personal loan side of things, ICICI seems to have a slightly differentiated commentary coming in, where they're not seeing too much of a delinquency on that particular pool of assets. And that's something that stood out, at least for me. On the growth side of things as well, impressive. 16% growth year on year on advances, 3% sequential, 15% on deposits as well, 1% sequential on the higher base that they did last quarter. So overall, it looked like a very strong set and a steady set, more importantly. No slip-ups on any of those line items that came out.
All right, I'm just being told, let's pull up the intraday chart on the Nifty 50. Thanks so much, Harsh, for getting us those details. Nifty 50 now only 25 points away. And like I said, tantalizingly close. It is climbing. It is just a matter of a few points. And we will, of course, get you the voices that matter on what this means for you and your investments as well. For now, let's move on with the show. And we've got Rajesh Agarwal of AUM Capital and Rajesh Palvia of Axis Securities joining in. It's a bit of a challenge for me to identify the two of you, but what I will do is I will refer to you, Rajesh Agarwal, as Rajesh Agarwal, and Rajesh for Rajesh Palvia, and hopefully we'll be able to get through the next half an hour or so. Let's first go to you, Rajesh Agarwal, on fundamentals on ICICI Bank. What do you make of the results, and would you buy at this juncture? It is one of the outperformers.
Good morning, Alex. Good morning, Rajesh. And it's a pleasure to be in your show. As far as ICICI is concerned, I totally agree with Harsh what he said right now, that the contraction in the NIM square lesser than when we compare to Kodak or Axis. And that's one of the very big positives which I feel is there in ICICI Bank. June quarter numbers, we all know, has been very good. PAT went up by around 15%, NII went up by around 7%, loan growth was around 15%, and the best part was net interest margin, which came at around 4.36%. This is better than some of its larger peers. NII growth has been consistent through last 2-3 quarters. And we should not also forget but that the PAT was helped by treasury gains and dividend. The best part was the subsidiaries were doing very well. The LI business bottom line was up. Performance came in, very good performance came in from GI, where bottom line was up by around 47%. We expect that the ROA would be continuing to be in the 2.2, 2.3 range in the next 2-3 years or so. So we are bullish on this stock, although it has run up quite a lot. Maybe 1260, 1270 odd levels in the short term would be a probable target, but that would be a very small target. But for a 1 year time horizon, we believe 1400 would be a better target to look up.
All right. So there is still upside from this point, despite the kind of run that the bank has had. Let's jump into the queries, and just a quick reminder, you see the number on your screen. That's where you send your questions to us. The first question we're taking is from Kanishk, and he's talking about a counter that has run quite a bit. He's bought Cochin Shipyard at a price of 2845, and he's wondering whether he should hold or sell. The stock is up 4.5% today itself, or more than that, close to 5% in trade today. And unfortunately, it is not above his buy price. So, Rajesh, on the technicals, what should he do? Should he hold on to this?
Yeah, so I think he should hold the position, as overall long-term structure is bullish. There was some mild profit taking was there in last couple of weeks, but still again, the stock is now penetrating to its 20-day moving average. I think if stocks crosses about 2620 level, then I think then the next target for the stock for near-term perspective would be around 2800. And if it crosses 2800, then next target we can see towards 3200 to 3400 also. So overall structure is bullish. Buy on dips is the strategy. I think if we can deploy some more, a position here to average out, would be again, right strategy, as we believe that, overall structure is bullish, and possible target on a positional perspective, we can see towards 3200 to 3400.
Okay. That was a view on the technicals. We've got a couple more questions on the defense space, and this is from Richie. He's asking about Apollo Microsystems and DCX India, and he's holding 250 shares of each. I'm not sure of the buy price of these two, but Rajesh, on the fundamentals, would you buy more at this current level, or would you hold? Would you exit? What's the view?
Apollo Micro is a hold from our side. It has run up quite a lot as the entire defense space has been performing well. I think further upside would take some time. Maybe 140 would be a decent target in the medium term. But as far as DCX is concerned, we have a buy call on this. And we believe that one can even add at this point of time, considering the fact that the kind of order book this company had, the new orders being pouring in. So we have a target of around 450, 480 within the next 1 year. So DCX system is a buy from our side at these levels also, while Apollo is a hold.
All right. I just want to point out that the Nifty 50 is, again, within touching distance. It's just about 15 points away at this juncture. And, I'm stressing this quite a bit, but in the larger context, of course, one might argue that it's par for the course. It was meant to reach this point. But it is a landmark if you think about it. 25,000 on the Nifty 50 is something to laud, something to celebrate. and certainly something that we're going to pay a lot of attention to. It is, at the end of the day, another number, but it is also certainly a number to celebrate with a lot of fanfare. Of course, let's jump back to the questions. Syed is asking the next question. Kaveri Seed is the company that he's interested in, and he's asking whether he can buy into this. Rajesh Agarwal, on the fundamentals, it's run up quite significantly, 70+%, 75+% in 2024 alone. Would you buy into this right now?
Not at this point of time. As you said, it has run up quite a lot. I would wait for some correction, although the numbers have been decent, I would say, if not good. The focus of government on agri sector this time in the budget is another plus point for this. But for buying, I would wait for around levels of 1,050, 1,080 odd levels.
The next one we're taking is from Shibi, and she's asking about IRFC from the short-term perspective. And this one's for you, Rajesh. What would you do on the charts?
So most of the railway stocks have corrected in last couple of weeks, and now again, if we analyze the IRFC structure, it's almost paused its corrective move at 50-day moving average, and some reversal has been there from those levels. Though long-term structure is bullish for IRFC, so we believe that yes, one can hold the position if they have already bought, or even at the current level also one can deploy some long trade also, as we believe that here there is a high possibility that some pullback trade is likely to be there in IRFC. Even if we look at the most of the railway stocks has also shown good buying interest in today's session. So I think as overall market is bullish, railway is the theme where again continuity of uptrend would be there. So IRFC he can buy with stop loss of 175 on the higher side. Once his stock crosses about 210. Then possible next target we can see towards 240 to 250 also.
All right, we're within touching distance of history. Just about 6 points away, we began tantalizingly close, and now we're just a hair's breadth away from that 25,000 mark. What a momentous occasion it would be for the Nifty 50 to reach this point. And in fact, we will talk about some of the key contributors that have brought us to this point. But Rajesh, I'll come back to you on the technicals. What are the factors that are leading this charge, if you can call it that? And what are the factors that would be supportive of holding above 25,000, if at all?
So Alex, most of the large cap stocks have started participating. IT was the sector. Then now again, other sectors have also started participating. Even the banking, which was underperforming in the today's session, we have seen most of the banking stocks has also shown a good uptake in intraday basis also. And now almost Bank Nifty is hovering around 52,000 mark. So I think if we analyze the broader market, most of the sectors which was consolidating now started participating in this rally. Reliance also started participating in this up move. So I think this rally can extend, as now the major call concentration is placed at 25,000 level. I think if we crosses those level, then another round of short covering we can witness in the Nifty ahead of this weekly expiry, and then possible immediate target for Nifty puts it towards 25,200 to 300 zone also. In budget knee-jerk reaction, we have almost gained 1,000 point for the Nifty in a week's time. This is clearly showing that there is a confidence on market for long-term structure. That's why we are seeing that now in this really large cap, mid cap, small cap, all three pockets are doing good. So that clearly shows that we can cross 25,000 and possible target 25,300 could be there in coming trading sessions also.
Well, they say that it's all about relativity, right? You're waiting for something to happen, and you might just have to wait a little longer for that to happen, because it's right now just touch and go. It could happen any minute. For now, let's continue to talk about some of the queries that we've gotten. In fact, there are people that are asking about the fundamentals and where we stand right now in terms of valuations as well. So why don't we get a view from you, Rajesh Agarwal, on what you think about the factors that have led us to this 25,000 mark, and which areas, if at all, would you suggest taking money off the table, if at all, and where do you see opportunities?
See, as far as market going to 25,000 is concerned, I think there have been a lot of factors which has been playing in the last 4 or 5 years. If I have to stretch a little bit, because there have been changes in the GST, PLI, and then digitization, all those things. Then there were wars going on across the world where logistics were hampered, and India was in a better position. Indian companies have been doing well. And now at this point of time, the best part is retail is participating in the market like anything. 21,000 plus SIP is a thing to look upon. And still we are below the global averages of mutual fund investors across the world. So we think that a lot of scope is still there going forward when more SIP is going to come up. And that's helping the market first. Second, we have seen a lot of money coming into index funds, and that's helping the index move up. So it's almost 25,000. It's more money comes into index fund, it might go further from here. As far as valuations are concerned, yes, if you look at global, at historical averages of around 20 to 23, we might think that the averages, it's almost on the average or above the average, but we should not forget that many structural changes, as I pointed out, have taken place. And these kind of averages don't perform when structural changes has taken place. So I am very bullish on market, and we have advised our clients to buy on dips, keep buy on dips kind of strategy. Yes, there might be some amount of consolidation or correction in between, but on a longer term horizon, we feel that there is a lot of steam left.
Yeah, of course, this is a psychological number more than anything else. If you look at the high point of the day, and I'm reading that on the screen, 24,999.75. It's pretty much there already. We're literally within kissing distance of that mark. But having said that, let's go back to it. When we breached the mark, we've got several questions that have come through. And in fact, the next one is from Santosh, and he's asking about CG Power, whether it can be bought at the current, juncture. Rajesh, on the technicals, I might have to interrupt you at any point, but then would you buy CG Power at the current value?
Yeah, definitely. Continuity of uptrend is there. Stock is holding its near-term, short-term moving averages. The way stock has recovered from its 50-day moving average, we believe that there is a potential to again cross its previous swing high, and maybe we can again see an all-time high trajectory for the stock in short to medium-term perspective. So I think one can buy and accumulate the stock with stop loss of 710. And immediate target is 780, and if it surpasses 780, then next target would be around 850 for CG Power.
Fair point. The next question is on a couple of counters that have done, actually one counter that has done incredibly well, REC. And Shiva from Bangalore is asking about whether or not he should hold on to this. His average price is 547 and he's making a gain, 637. So not as much as certain other people. Short-term view is being sought. Rajesh, on the chart, should he hold on to REC?
Yeah, definitely he can hold the position, as stock is comfortably holding about 20-day moving average. In the volatile market, stock managed to hold this 20-day moving average. That clearly shows that there is a strength on the near-term structure also. He can now trail the stop loss towards 605, and if it's hold 605 level for next couple of weeks, then there is a high possibility that again we may see a all-time high trajectory for REC, and possible target 690 to 700 would be there.
Yeah, okay. I'm not sure if, Rajesh Agarwal, if you have coverage on this. It's a small company, terribly small, 143 crore. There is still a gravitation of retail investors to some of these names. But have you tracked Ansal Housing? If so, what's the view on it? Kunal is asking.
So I'm sorry, we don't track this.
Okay. In the housing space, then, would you suggest another name that Kunal can look at the current juncture in this current market?
See, we will go for large cap names like Goddess Properties or Sober Developers, even the market leader DLF, which have reduced debt considerably and doing very well. We have seen a lot of news coming in that the premium projects have been taken, bought out in a single day. But one company which stands out in the entire lot is Century Textiles. The name suggests textile, but the major play in that is Birla Estates, which is again a subsidiary of Century Textiles, doing very well on the real estate part. They have a lot of land in the Worli which has been developed, and now they are moving into another cities like Bangalore and all. And this company is going to do very well. I think in next 1 year, 18 months down the line, around 20% upside from the current market price is quite possible.
Okay, we have to slip into a very quick break, and it's a risky time to get into a break, but we have to do it. 10 points away from 25,000. Do stay tuned. We'll be back before you know it. Welcome back. You're watching Ask Profit, and we are within touching distance of 25,000. In fact, the high point of the day was 24,999.75. That's how close we got to that landmark number for the benchmark Nifty 50. We're in the midst of taking your questions, and in fact, the next one we're taking is from Ashok, and Ashok is asking about J&K India. I must confess that I've not heard of this company. It's got a market capitalization of about 4,500 crore rupees, and it is a manufacturer of heating equipment. Rajesh Agarwal, do you have a view on the fundamentals?
No.
Okay.
I'm really sorry.
Rajesh, if you can pull up this counter, J&K India, it is... so I was trying to pull up the chart, and in fact, it's got a market capitalization, as I said, of about 4,500 crore. It's trading at 750. Do you have enough data to talk about the technicals?
So I think this is recent listing stock. I think it's listed in April 2024. The whatever limited data which I have, stock is still in trade to trade, segment. Some reversal has been taken place in the stock. If I analyze on the near term structure, there was a falling channel, but there is some reversal sign on the stock prices. With the limited data, here the immediate support area is placed at around 740. If it's hold 740, then there is a possibility of 830 to 850. This is the immediate target we can see on this stock.
Okay. Sudeep Datta is asking about Larsen & Toubro and whether it can be bought. What is a short-term view? So I'm coming back to you, Rajesh, on the technicals. Larsen & Toubro up and about in trade today, 2.3%. Would you buy at this juncture for the short term?
So after a consolidation of almost 7-8 weeks, now stocks managed to give breakout of that 7-8 week consolidation zone. Looking at the long term structure, yes, we are holding our bullish view. Now after this breakout, we believe that this stock now again managed to cross its previous all time high trajectory also. So I think yes, he can hold the position in L&T. With stop loss of 3,700, possible immediate target we can see towards 3840 to 3850, and if he can hold it for positional perspective, I think this stock can move for 4,000 kind of target also.
Okay, Radhakrishna from Bengaluru is asking about IREDA, and he's bought at levels of 291, 6,000 shares. It's higher than the current market price despite the kind of run that you've seen in IREDA. Rajesh Agarwal, on the fundamentals, would you hold on to this?
See, I would hold on to just get out when the price comes, because market is in a momentum, it might move up. But on valuation, it's trading at a very high valuation when compared to other players like PFC or REC. Yes, these companies into mainly renewable financing, but then the valuations are very stretched at this point of time. It's better to try to exit at higher levels.
50% in 2024 alone for IREDA. State Bank of India, we've spoken about a few lenders. Rajesh, you spoke about ICICI at the start. We've got Shiva, who's holding for the short term, though. His buy price is 830. What are the prospects? You're waiting for the results, but are you anticipating a good set of numbers, 3% up today itself? Rajesh Agarwal, sorry, apologies. Would you hold on the fundamentals?
See, if it's a long-term bet, yes, I can hold on to the fundamentals, and if my funds allow, I can even buy. Numbers have been pretty good in the last 2-3 quarters. Bank has been growing well. Asset quality has been taken care of. Yes, due to results, there might be some volatility in the stock in the near future. Maybe it's, if I'm not wrong, it's on Monday in the next 2-3 days. But still, it's a buy from my side. Any dips should be taken as an opportunity to add.
All right, the next one is Tata Steel, and we've got Shobha from Bengaluru, who's bought at 176.76. I believe she's looking for a short-term view on this counter. What's the view, Rajesh, on the charts?
So stock was under pressure. Even most of the stock metal stocks were under pressure, but some recovery is visible in Tata Steel also. But still, stock is trading below the 20-day, 50-day moving average. I think 168 to 174 is the major supply zone for the stock in this pullback. If at all stock crosses over 174, then continuation of pullback would be there, and then possible target we can see towards 185 also. But at this juncture, still I'll advise to book partial profits around 174 if it's bought at lower level, or one can keep a strict stop loss of 158 if you are holding the position.
I'm coming back to you, Rajesh, on TCI, Transport Corporation of India. We've got Senthil, who has bought at levels of 950, and he's got a short-term view on the stock. He's bought 500 shares, and he's wondering whether to accumulate at the current price, which is above 1,000. What's the view?
I think he can continue to hold the position for short-term perspective, also with the trailing stop loss of 965. I think there is a possibility that stock may attempt to move further higher to 1,050, 1,100 kind of zone in the near-term perspective. So 960 would be 960.65 would be the trailing stop loss to hold the position in TCI.
Ujjivan Small Finance, and this is a question from Karthik. He's not really specified what his time frame is, but Rajesh Agarwal, on the fundamentals, is this something that you would buy, and what would the target be if you have a view on the stock?
See, in fact, I would rather say one should sell if somebody is holding the stock. The numbers have been not that good. Small Finance Bank is not doing that well as the main full-fledged, full-services bank. So why not to switch to some better banks like we discussed in ICICI Bank or HDFC Bank, which is very good on valuation. If somebody is looking at a small finance bank, the only small finance bank which stands out is AU. So if somebody wants to invest in small finance, AU would be a better choice. Ujjivan is a avoid.
All right, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. Rajesh Agarwal, Rajesh Palvia, you've made my life a little difficult, but thank you so much for taking the time and speaking to us on Ask Profit. With that, it's a wrap on this edition of Ask Profit. This show is brought to you by Indiabulls House, or rather the former Indiabulls Housing Finance, which is now Samman Capital, and they say Jio Samman se. Do keep watching NDTV Profit.